Hello everyone, my name is Aarti and you're watching HW News. It has been 5 days since the news of the collapse of SVB, that is Silicon Valley Bank, came out, triggering panic in the global markets. The fears of 2008-like bank collapse started taking root, and the reasons were such. Headquartered in Santa Clara, California, the bank was a go-to for tech startups not only in the Silicon Valley but also in Europe and in India. On Friday morning, the bank was taken over by the federal regulators with deposits of hundreds and thousands logged in. This was the biggest banking failure in the US since Washington Mutual in 2008. So how did Silicon Valley Bank collapse? Who are affected by it? And most importantly, what is the plan to safeguard the depositors' money? And what lessons can we learn from this? Let's understand in today's video. But before that, if you're watching this video on YouTube, please make sure you subscribe to our channel, like this video and comment below it. If you're watching on Facebook, then please follow our page and share this video. On 7th of March, Silicon Valley Bank tweeted, "Proud to be on Forbes' annual ranking of America's best banks." On 10th of March, just 3 days later, the bank was shut down and taken over by the federal regulator. With an asset base of $209 billion, this was the biggest bank to fail after the 2008 financial crisis that ripped through the markets. The global markets took a beating of this collapse too. European equity markets ended sharply lower, whereas Asian markets were affected too. Why did it happen? What went wrong with SVB? But before getting into that, let us understand a little bit about Silicon Valley Bank. Now, first of all, what is Silicon Valley Bank? Silicon Valley Bank, subsidiary of Silicon Valley Finances, was founded in 1983. It is headquartered in Santa Clara, California, the Silicon Valley at the heart of the startup world. It was started by former Bank of America managers to focus on the needs of the startup companies with just 100 initial investors. Soon, the bank became the darling of the startup sector. It was a go-to bank for tech, gaming startups, and also the health industry. It also manages funds of venture capitalists and HNI founders. Much of their money was parked in SVB. Over the last 4 decades, SVB had become the 16th largest bank in the US with an asset base of over $200 billion. So how did the bank collapse? Well, the bank suffered from what is called as a classic case of bank run. A bank run occurs when a large number of customers of a bank or other financial institution withdraw their deposits simultaneously over concerns of the bank's solvency. As more people withdraw their funds, the probability of the default increases, prompting more people to withdraw their deposits. In extreme cases, the bank's reserves may not be sufficient to cover the withdrawals. This is exactly what happened to SVB. In fact, 2 days before the collapse, the bank had tried to persuade the depositors to not to panic withdraw deposits from the bank. But the requests did not really help. But how did the bank get to this point where the customers started withdrawing money in panic mode? For that, we have to deep dive into how banks do business. Banks perform 2 primary tasks: deposits and lending. We put our savings in the banks. The banks give certain percentage of interest on the money deposited. But how does a bank do that? It does that by lending our money to those who need it at a higher interest rate. When they pay EMI or return the money, the bank earns money. Usually, the difference between the interest on saving and interest on lending is the profit of the bank. But apart from this, banks also invest your money to earn handsome returns. With the VC money pumping in, several startups chose to park their money with Silicon Valley Bank. During pandemic years, as the tech startups became the VC favorite bet, the bank's deposit rose. Between 2020 and 2022, Silicon Valley Bank's deposits soared 3 times, from $62 billion to $190 billion. Flush with cash from high-flying startups, Silicon Valley Bank bought huge amounts of bonds more than a year ago. This was the time when the US central bank had slashed interest rates. The SVB invested in long-term bonds like real estate securities. But come 2023, the federal bank began to raise the interest rate to bring inflation in control. And that's when things started going downhill for the bank. The value of its long-term bonds started to erode. On the other hand, as the funding winter came, the VC money pumping in startups started to run dry. So they began to dig into their savings to meet their capital needs. As a result, SVB customers began to withdraw more and more money. To pay those requests, Silicon Valley Bank was forced to sell off some of its investment at a time when their value had declined. They sold it at a loss. In its surprise disclosure on last Wednesday, the bank said it had lost nearly $2 billion. However, the disclosure had a sort of domino effect. On Wednesday, according to reports, a fund run by leading VC Peter Thiel asked to withdraw money from SVB. The bank then clarified that it had sold some of its bonds to get the money. But panic had spread. California startups started pulling money out of the bank. On March 10th, SVB was declared bankrupt. Now, what was the policy decision on this? The California Department of Financial Protection and Innovation shut down Silicon Valley Bank and appointed the Federal Deposit Insurance Corporation as the receiver. The FDIC created a new bank called the National Bank of Santa Clara to hold the deposits and other assets. The deposits were frozen for the weekend. Initially, more panic spread as there were reports that the bank will open operations on Monday, but only the insured deposits can be accessed. The issue was at least 89% of the deposits in the bank were uninsured. Now, how the US government saved SVB depositors? As the SVB collapse hit the news, no less than 72 hours later, US government moved quickly and deployed an emergency plan. And that is where a lesson lies. The Biden administration stepped in the matter with Treasury Department officials announcing that not just those with insured deposit, but also all of the customers will be able to access their deposits in the bank. In an extraordinary move, US regulators classified Silicon Valley Bank as a systemic risk to the financial system, a designation that allows it to guarantee all deposits and not just the standard $250,000. While the plan would not protect stock and bondholders, depositors' money will be paid out from $100 billion government fund that banks pay fees into. The management was also removed with immediate effect. Similar measures were also deployed for New York-based Signature Bank, which also collapsed in 2 days of SVB collapse. In the 72 hours since SVB collapse, all hands were on deck to allay the fears of 2008 Link's meltdown and restore the confidence of depositors to avoid SVB-like situation in other banks. Now compare it to how India handled some of its bank collapses in the past. India witnessed 3 such major bank collapses in the past few years: Yes Bank, Lakshmi Vilas Bank and Punjab and Maharashtra Cooperative Bank. Now I won't go into why the banks collapsed. We have devoted a number of episodes of business tidbits, editorials and charchas to analyze that. In almost all the 3 cases, the measure taken by the government included putting strict moratorium and capping withdrawal limits by RBI. In case of PMC, depositors could only withdraw 1,000 rupees per customer for initial 6 months. This capping was increased to 10,000 and 40,000 eventually, but money of several depositors was stuck who queued up outside the bank. According to a NewsClick report from July 2020, since the PMC bank scam, as many as 70 depositors had died due to financial stress, as claimed by the Depositors Association. Now recently, the Modi government announced that the branches of Punjab and Maharashtra Cooperative Bank will operate as Unity Small Finance Bank branches from January 25th, 2022. So this was the story about how the SVB collapse was handled by the US government versus how the bank collapses or the bank losses in India that were handled by the Indian government. What do you think about this? Let us know in the comment box below. For more news and updates, you can log on to www.hwnews.in.